How you going there, Sharon? Sorry, I just had it on mute. I hadn't actually started yet, so looks like we're getting a few coming in, so we'll get started. G'day, Gino. G'day, Peter. Hope we're all doing well. We've had a good weekend. Hi-oh, Peter. All right. So can you hear me okay? Good. Nisha. All right, let's get up and running. So welcome to Trade Setup, a live stream. What are we now, the 14th of October. So cruising along nicely. I don't know if anyone's like me, but these markets been pretty whipsawy, all trade related. But a few interesting things happening, obviously. But yeah, whipping around a bit. So we'll go through what I want to focus on more today. Just to start with is the overall markets, which just get a bias of what we probably haven't had too much time just looking at the charts on the Dow, the DAX, the FTSE. Big S&P 500, the broader market in the US, ASX 200. We'll just go through, what we're looking for continuation higher, or what we could be looking for if we're going to get caught in a bit of a trap and this market could tip over. So I'll give you my rundown and my take on the trade at the moment. And I don't know when you could feel free to. It's triggered BCD hit 61. It did. But it was about the same time as we sent the alert. So we sent the alert 2 minutes later. It did trigger. It just traded a few thousand. Well, I don't know. Traded a bit at 61. So I haven't actually sent out the alert. That's it's ready and raring. I wouldn't mind seeing it trade 61 again. Then off we go. But it still looks good. I mean, if you haven't entered and it goes to 57, so be it. We got that wrong, but we'll see. It looks actually all right. We'll go through. Yes, today I'm just going to chat about. Feel free to put up your hands if you've got any idea about, or any different opinions about what's happening with trade. Yeah, feel free to type it in. My view, I'll give you my take on it. I'm probably cynical at the moment because I'm always going to be cynical when the markets are at all-time highs, and I'll be less cynical when they have gone down to the lows because I think my aim with trading is to be on the opposite side of the fence of what the bulk are, because that's where your opportunity is going to lay, generally. Or worst case scenario, it's going to keep you out of trouble. So I think if you turn completely bullish now, it could be the wrong thing. Yeah, I know there's been a partial deal, but it could be the wrong thing because everyone's looking the same thing. Oh, we've got this. The market reacted high. If you're sitting over the weekend looking at the markets, what happened on Friday night and even Thursday when it kicked off on the back of a partial deal. And the US is closed tonight, so we could get ahead of ourselves and then US come out and smash us on Tuesday night. And we have the next couple of days today and tomorrow, rally a bit overnight. The Europeans rally overnight, and then we back in tomorrow and we rally again. The US come out and sell into it because they just let their futures drift higher, sell into it, and then stock market opens low and we get creamed on Wednesday. That anything could happen because. Oh, actually, we'll go through it now. So let's minimize that. So, sorry, before I go, anyone that's new, remember you could follow us at Twitter, and I should be putting on here the Trading View handle, I think it's called. Yeah, we'll go. No, I agree with you, Peter. I think there's plenty of reasons, and sometimes that could be you don't. I'll get through this, and then we'll get into it. I've got so much going around in my head. It could be a lot of rubbish, but we'll see. So remember, you can join us at Twitter at the top left-hand corner. It's at @trade_setup. Now for Trading View, which I'm getting a bit more active on that now, is the same as capital T for trade, capital S for setup. If you just search Trade Setup with a underscore as well, you'll find us. I'll put it up there now. Where is it? Oh, it's not here. It's under. You can see that under our profile. I'll get that now. So it's trade_setup. If you search by going the ticker up the top, go to people, type it in, and you'll be able to find us and follow us there. Much appreciated if you follow us. I think it just helps spread the word a bit. Anyway, that's that. Following, I want to go to charts. So that's on TradingView. Top right is Facebook. There's going to be less or the same as what we post on Twitter, and then subscribe to us on YouTube at the bottom right. And we did post, I think, recently there was something we posted. I did a talk to the ATAA. I think Gino was there. But I did a talk there that I did manage to get a hold of and post it onto. I didn't put out the alert for TradeSetup. It was just posted onto YouTube. So anyone would have had a bit of a view of that, see what's going on there. Me talking a bit of bits and pieces. Transfer that. So let's get into the markets. I'm not sure who's bullish, bearish, or what you are. I'm happy to buy, basically, as long as it's going up. So to protect myself, and this is what I say about being the opposite side of the fence, because you've got to remember the market is basically fuel. If it's going to move up or down, it needs the fuel. And where is that fuel at the moment? I mean, can you say when we're at all-time highs that the bulk of the fuel's on the sidelines? I don't think so, because the market has still been ticking higher, and it's got up to these highs on the ASX for a reason. So if you go to the long-term view, you look at this sort of trend up here. The bulk of the people were jumping in, at different stages, depending on your risk profile. If you were very aggressive, you took the punt around here. Maybe you bought on the way down. I mean, we don't know, but either way, once it got to about here, that's where we started loading up. I started getting into positions once we got through. Some people said that was late, but that was the first sign of confirmation. Once you got the market, the bulk of the market, your action is below the MAs, you're heading down. If you're willing to buy on the dips, that's great. It just depends where you start. It's as simple as that. And if you get lucky and the market does turn, great. But remember, there's going to be times like a GFC. If you stick to that kind of process or that kind of idea, then there's going to be days, you bought here, and you bought here. And okay, this time it turned up, but sometimes it's not going to turn up, and it's going to be 1,000 points lower. And that's where you get, I guess, the difference between your retail and your professionals. Your professionals wait for that confirmation. If you have to give up something, it's fine, because longer term, that's always going to improve your results. So that's why basically, you get this bounce here, and you know that once you get through, let's just draw it up. I just want to be clear on what I'm talking about. Here we go. Let me just grab that. So the reason why we turned and got long is because, here we go. So you've had a downtrend basically like that. So this is your sort of key level where it did sort of touch up towards there and then react off. And you had these minor levels, so just lower highs, but basically you had these sorts of levels that were coming into play. All right, at that time, let's just take all those out. This kind of level that was coming into play. So on the way down, these are the levels we've got in mind. Not so much here because it's part of that one move down. And then you got a bounce, and you traded basically chopped around that earlier level, just below 5,800 over here. We chopped around there for a bit and then headed higher. But that was, all honesty, I think I was away on holidays at that stage. So once it got through there, and that was a thin market, it's pushed through. Then to me, that trend has changed, but we haven't got confirmation, because don't forget, the market this could be all a part of one big trend. We don't know. All we're trying to do is see what's in front of us and assess it as we go, or assess it on the fly. And that's what, that's basically what trading is. So once you get to this level, we start chopping around there. The longer we spend up at that level without rolling over, to me, it was just showing strength. And it was the first sign that we're starting to hold above the MAs. The MAs are turning up. So rather than the market pulling back to catch up with the MAs, it's consolidating. The MAs are catching up with the price action, if that makes sense. So when you get a market that might press, stab down like this, it pulls back to the MAs. And that's probably not the best example there. Say you got this little high, you got pressed up, it's come back to the MAs, and it's gone up, it's come back to the MAs, and so on. But when you get a market that doesn't come back to the MAs, say this chopped around here and the MAs caught up with it, it's actually a strong sign or weakness on this type of thing. When you got the market pressed down, it didn't really, the MAs had the crossover, and the MAs after time basically come in line with the price action, and then it did sort of chop around a bit, but it really didn't make up too much ground from that move down, and then you started seeing the sell-off. So at that stage, that's what we're looking at. All right, and then once you broke to the upside, you probably want to be long, okay? Because I think the market's turned, all this action on the downside, things have changed, momentum's changed, the sentiment that's drove the market down has changed, and maybe it was a big washout, and there's a lot to do with the Christmas period too. Don't forget, it could either do two things. It can get ahead of itself on the upside or the downside during the Christmas period, because they know that people are away and not taking the market. They're on holidays. It's a thin market. it's easier for markets to move harder in either direction. And so that's the way I was viewing it coming into December. That was pretty much in Christmas or Christmas Eve, I think, around that type, the lows, and then it took off. So there, you know that that's your sort of first port of call. Then we got in, I would say, relatively early, considering that trend up, and considering it hadn't make back any of these gains just yet, or those losses, sorry. Got in early, and then you're getting people getting in at different stages. Maybe here they want a bit more confirmation. Here, you know, all these sorts of things. So for me, all that of that one big move up from top to bottom is people buying and selling. So you know that the bulk of traders, they're in the market. If you want to be in, you're going to get those little minor pullbacks when you get a bit of profit taking and then they jump back in. So the bulk of traders, you would assume after all that action, whether they got in early or late, are in the market. All right. So what I'm viewing that is fuel, and that's why I was saying just about being on. You know, when you hear the bulk is short, if that makes sense, because this major trend has been down, and we're just starting to, at this stage, we're just starting to. I'll draw that up. Change in momentum. So you could say here at this stage, the bulk is short. So we've got enough fuel that could be ready to pop higher. So anyone that's short is fuel to get out, or anyone that has been cleaned out of the market on this move down and is back on the sidelines, either way, the bulk of the move is not in. And that's why you're looking, when I was talking about fuel in the market, whether it's a particular stock, whether it's a currency, it's all the same thing. To me, it's all fuel. What's happening? Where are the people positioned? What would happen if they get you know, if the bulk of position is down at the moment and the people on the sidelines, what would happen if that changes? And how do I want to get in? Because I want to take advantage of that momentum shift when it changes. And you know they have to be forced to get out, or there's a whole lot of people on the sidelines ready to come into that market. And they're the fuel that are going to move it. Okay, so at this stage, my thesis was basically if it cracks above that high, we want to be long, because I know there's going to be a fair few people that's going to change. That's sort of a key level that's going to change the momentum or change the sentiment for when people are talking the end of the world, the major correction all the way down here. It didn't play out. They got it wrong. And anyone that's on the sidelines may be looking to go, hey, that's not as bad as we thought. Let's jump in, because we could go to all-time highs, which we did eventually. We traded all-time highs up here and then basically tipped over from there. So that was the fuel at that stage. So now it's changed for me. So we've got to view it. This has extended quite a bit. And you can see it's been overextended a few times. We had little pullbacks along the way, but they've been bought up until we got to about here when the market tipped over. So to me, the market is loaded long. Whether there's more and that's enough of a correction, there's nothing compared to this sort of correction, whether that's enough of the correction to clean out a few of these buys. But if you just take it purely on levels, we've only got down to here. So really it's probably people there have been cleaned out. Maybe they're holding. You know, maybe they weathered the storm here. Maybe they got out when it tipped up there. So there's not, if you didn't close out at this stage, you're probably not under that much pressure. So it's basically from the low up of the people that are under pressure. Anywhere the below, which is the bulk of them, probably 2/3 of the move, is still potentially in the market. So there still is quite a bit of fuel, I'd assume, that could be forced out if that's the case, or they're happy to continue buying on the way up, you know, adding to positions because they're happy they're sitting in profit. All right, so that's the way I'm viewing the market at the moment. To say whether I'm biased up or down, we might just clean this up. Just take a longer term view. Let me just see. If you just look at the weekly, it's still, you know, it is biased up. We've had a bit of a clean out here. If we just go, just look, we're just focusing on this bit, you'll see there's a case for each, all right? And I'm starting to lean towards this market wants a deal. It doesn't really want to go down. The move down wasn't that bad. You know, you've got a market that basically, before it had a decent correction, was just going up. Correction, we put in a low here around 64. We bounced, we put in a lower high. But that lower high is not really confirmed until you trade around 64, which we fell short of. So really the market's is showing more indecision and it's contracting. Okay, so when it's contracting like that, it's holding higher lows. There's an each way bet at the moment, whether it's going down or going up. That's why you've got to view that until the market's only confirmed a lower high when it trades through that low. like that. Once it, or gets within a few percent, once it gets in with a few percent, that's a confirmed lower high. But until then, it's not. But at the same token, we haven't really confirmed this as a higher low because we haven't got up to 68 yet. All right, so at the moment, we could fall short at 67 and then roll over to 60. It keeps bouncing around until this trade deal is finalized. Okay, so what I think has happened on Friday, they come out with, and we knew that 2 days prior, or the day, I think it was it Thursday when it was choppy action. Let me just go back. It was probably going to be an intraday chart. This action, so that was Thursday. That's when the market was not looking so great. It's opened up, got smashed down, something came out of China, and then it's got ran back up again on the potential for a partial deal. And this is what the talk was. And then all the markets got knocked around on Thursday. And then lo and behold, they come out and talked about a partial. The markets took off, and we held, Friday they took off. Well, probably this is Friday night, but then they took off again Friday night, and we're up here. All right. G'day, Daniel. So that's what's driving the markets. Obviously, the partial deal. So let's go back. I've got to get my train of thought again, which disappears quite easily. So go back to the charts. So yeah, it's talk of this partial deal. So what happened Friday night? It was still the same thing, and they come out and basically confirmed, yeah, this is what they're going to do. There's going to be a partial deal. But the thing is, it's based on a handshake, and that's what I think people could get concerned about, because they are talking this is going to take weeks. And again, it's just that waiting game. So for me, the market could be 1,000 points higher because they're trying to keep that ball rolling, if that makes sense, before they tell you, oh, we haven't come to a deal and we're going to raise tariffs and all that sort of stuff. Because they were talking about 4 to 5 weeks until something's signed. And of course, Trump comes out this morning. As soon as the market opens, he's banging on about, no, it's not. We're not waiting until it gets signed. They're going to buy stuff now. So if China then turn around and we find out in a week or so that they're not buying anything, you know that it's all just fluff. It's fluff to keep the market going. And what's the bigger picture behind the scenes? We don't know, because they keep talking up a trade deal without really giving us too much. I think the market was forced. Well, China and the US have been forced just recently, well, because of this negative price action, because they know as well as we do, we're looking at charts, they know what the price action is, getting a bit tentative up at the all-time highs in the US, where you've got the S&P and the Dow. They're up at all-time highs. They're teetering on going to all-time highs again. And when markets start to get nervous into all-time, or getting up to those higher levels again, because it's run up, it's had a good run up, and we've loaded back into the market, traders have loaded back in, there's still the outside chance that if they don't come up with a deal, the market will roll over. And it started to show signs that it was really dependent on the news flow that was coming through. So of course, they've come out Thursday, Friday, said we have to give them something. Basically, that's my view. They have to give them something to buoy the market, to support the market. And they did that in the form of a partial deal, which really wasn't much. And don't forget, China agreed before. And there's even a tweet from 2018 when Trump tweeted, China are going to buy our agricultural stuff. And then another tweet, they're going to buy the agricultural stuff. They're going to buy off us and increase, help farmers out. They still haven't done it. What's to say this is different just because they come out with a deal? A partial deal. They may do, they may not, or they might do what they did last time, buy a little bit and then say we're not buying anymore. So it's kind of interesting. I find it still, even though the market's bouncing, and market's about sentiment, it's not about so much about whether a deal's done or not. It's about the idea of a deal getting done. The fact that they've come out and said phase one, it hasn't even been confirmed yet, but phase one's on the cards. We're going to do that. Then we're going to step into phase two, and we're going to get that done soon as well. They're trying to push that market, I think, increase the sentiment and get the ball rolling on the upside. Because once it's rolling on the upside, it's kind of hard to turn. So they can start filtering out some negative news that may not turn that easily because everyone's loaded long. No one wants to get out on the first sign of weakness. They may wait a bit because people don't like to. It's just one of those things. You don't tend to take your profits, or you don't. You want a bit more confirmation that things are going to roll over before you start being forced into closing. So that's why once they get more of an established trend, like basically most of 2019, not much shifted it off its track until we got up near the highs at 69. So once we got up to the highs, anyone that's been buying it in this move, and I think that's your weekly chart, anyone that's bought it with this move up, once you get into the highs, it's a different story because you're going from the unknown down here to the known. We know we got up there. Everyone knows that there's a well-established trend in place, and the market is heading up. It's going to be time to take some profits. So once the news, I don't think had changed at this point when we did get that sell-off, hasn't really changed that much. There was still things in Hong Kong. There was problems in Hong Kong. There's problems with trade. We knew that prior, but the market hadn't turned because it was well entrenched with the trend. Once you get to a level where they're thinking about taking profits, then things can change. But at the moment, if the US continue and China continue with those, I guess, in my view, they get the market rolling in one direction, which is up. They want it up. Then it may be hard to steer that, and they could potentially just prolong the trade war. So nothing actually happens, but the market's starting to head higher. We're in all-time highs, and people who have potentially missed out on this move and are watching this, expect them to roll over, and it's not. They're starting to jump in. So it could just be a pure, well, maybe all this stuff that's going on is a pure trying to support sentiment. But again, when we don't know, nothing's shown me just yet. We've had pullback here. This is on the daily chart now, the index. Pullback, cleaned out a few of the late longs. It's bounced back. We pull back. You can see the savage turn down, but it was short-lived, as in it was holding up at a lower level. So you still got that, until we break up through 68 or down through 64, say, or even maybe 65 from here. If you break down through 65 or, this low, whatever that is, low is 64.75, we haven't confirmed anything just yet. If we go through those lows, then yeah, I think that's going to be a bit more negative. Then that would lead me to believe it taken out of 64 and even a bigger move down. But I think there's got to be a dramatic shift in sentiment, which at the moment is just pointing up. So yeah, that's the ASX. We just go over to the indices now. Let's just look at the Dow. Let's look at the Dow. And this is the futures. And that's the 1 hour chart. I'll go to a daily. So it's still, this is, you'll understand it. It didn't break out. So, the people who are really bullish on Friday in the last couple of days, it hasn't really technically broken out of anything just yet. Does that make sense? So you've still got, potentially this squeeze in play. And you've got, you could argue you've got a level up here, or you can. You've essentially got that double top. But double tops don't always lead to sell-offs. You got to remember that. You need your lower high. So you've got, at the moment, you've got it retested the high. It's pulled back, hold a lower high, a higher low in here. And previously back here, say 25, it's still showing some bullish signs. But the flip side, it didn't drag through. So I wouldn't be surprised, from here, I would like to see some higher lows hold in here, but just below, because I think that'll be a good setup for a bit of a squeeze of short sellers. And I think this could lead to a bit of a breakout once we start getting, getting closer to that point of agreement, if that makes sense. So I think the market's still got some work to do. It could still roll over, a big bounce back. So I don't think the market's going to take off in the back of a partial trade deal because we've been fooled before. And really nothing much has changed from what I can see. What they said on Thursday, Friday, China's agreed to buy their stuff before, and they've agreed to different things before, and nothing has played out. The only real thing the market's probably happy about is that tariffs are not going to be put on. I think that's tomorrow. It was meant to be added another 5% or so, from 25 to 30%, I think it was. So that's what I think the market's happy now. That's been delayed, which is a good sign. It's probably something different that's happened before, because I think we've had talks before in the past. A few days later, Trump's just gone in and whacked up the tariffs, which has sort of spooked the market a bit. So the fact that they're going to hold off on those potentially till later on, but I think he's going to use that. Well, if we don't, we're going to raise tariffs. If you don't go and buy our stuff, we're going to raise tariffs. We're going to increase that and potentially increase more. So it'll be interesting to see what China does from here, whether they do what they say, or whether they muck around a bit more and they delay, or whatever they do. Problem is, if they delay and they're talking about the 2020 elections, who are they going to get? And I was speaking about this with Davin today. It may be the devil in Trump than anyone else. So there's talk of them, they're potentially delaying everything till they get someone different to deal with, potentially. But they don't know who they're going to get at the moment. I don't know much about the US politics to know who's sort of at the forefront of winning. So yeah, that's the Dow. That's the daily. Again, you've got the markets push down here, you've got a high low, it's pressed back up, we may get a lower high in play, come back down again. You may just continue to chop over the next few weeks until something better comes out. I think in the way of news or more concrete, they may be waiting the next 4 or 5 weeks until this partial deal is in writing, because it's not in writing yet. And I think the market knows that. Had a bit of a jump, and that could be intraday traders, who were being biased short, expecting it to fall apart. It didn't fall apart. They did come out with a partial deal. They've had to close out. It's triggered some longs to jump in intraday. The market's ended up 30, because if you notice, they left it until the last few minutes. Okay, am I back on? No. Can you all hear me clear? Is that okay? I'll just continue to jabber on if that's okay. So yeah, they left the announcement of a partial deal right up until the last minute. And you can see what happened in the last day, half an hour or so. The market sold off because, they do know that you hold it over the weekend, it's still not confirmed. There's still just a handshake. It's still something that needs to be put in writing, and that might fall over then, but they might leave that until 4 or 5 weeks. And this is what I was talking about with the market getting a bit of a run on. They start to get the bulls start coming out, the bears step aside, the market starts to get an entrenched uptrend. Across the board, you've got the DAX, the FTSE, US, us, and then they start to say, "Oh, look, it's not going quite well." And they start to let us down nicely when you get dumped by a girlfriend. Let us down nicely that a deal's not going to get done. So there's all manner and means to try to support the market. But anyway, that's my view. So you got the Dow. To me, hasn't confirmed anything just yet, just because I've got this level in here. I'll take that out. That's nothing. The DAX. We go to the DAX. The DAX took off on. They've got the two-pronged attack with them. They've got no, come on. They've got take that out. They've got Brexit as well. So they've got Brexit and a potential trade deal. So this is the daily chart. You've got the markets pressed up, had a good correction lower, it's popped up, but we haven't quite. These are probably the highs that you're going to want to get through. And once you get through there, yeah, then I'm assuming this is a key higher low. And if you just take it from that low to that high and move it, so from those lows, you're heading back up into the all-time highs. So that's where I'll be looking once it gets even this inside level. It's just there now. It hasn't confirmed a breakthrough just yet, but I think they're your two key levels on the DAX you'd be looking at, because this could easily, it's the same sort of thing, lower high, had a big correction. That's your key moves are down, up, down, up. At the moment, we're here. We haven't quite confirmed that this leg up is going to come into play. It could just be we're rolling over. We broke this low with this move. We're back up. We could be just finding resistance here at 12,510, whatever it is, or maybe up at retest 12,644. Which gives you a few points on the upside still, and then roll over. So once we get through this level, you could probably take a punt if you're going to go long. Have your stop underneath that higher low there at 817. And then if it stalls here and starts to I'd be out pretty quick. So if it starts to stall there and doesn't look like it's going to go through, then that could be your double top and it rolls over. And then you got this action, you got big move up, big corrective, big push up, can't get through, that's a double top. And then you might get another shoulder, something like this, a lower high coming to play. And then you're looking at the bigger action down again, which would take you all the way down to these lows. All right. So even the DAX hasn't quite confirmed anything, even though it's, one day in the bigger scheme of things, because you're looking for the market to get momentum either up or down. You want this market, well, I personally do want it to show its hand. I want it to either capitulate and cave in and get it over and done with, or we get some shorts on the downside or start to lift. But I want a bigger trend. I want that bigger trend to start get established on the upside. So I know with confidence that I could start loading up a bit more into the market, into your shares, without knowing without thinking that markets can turn over any time. Does that make sense? So at the moment, the DAX to me hasn't quite confirmed anything just yet. If we just go to the FTSE, the FTSE is still sort of in that washing phase. It's had a big press down, so it's confirmed this level. That's confirmed lower high, but it could just be correcting the recent move down. It's correcting it back up, and we could get, I'm not trying to be a scare tactic, but we could just get the same sort of thing. bang, and down we go. Because that pattern to me, you got one move, and we could be looking for your secondary move all the way down to below 68. And if we're trading out 72, that's a 400-point move on the downside. That's a couple of big days down on the FTSE. So that hasn't confirmed anything either way just yet on the bigger picture. And that longer term, big support, big offer zone up at the all-time highs. You've retested and failed. Potentially that's a lower high coming into play, which we've spoken about before. It's all this washes just in the bigger scheme of things. Does that make sense? So just be wary if you're going to start diving left, right, and centre because they've got a partial deal. That's my view. But again, you're just looking for those quality setups. And I think that's where we're at the moment. Does that make sense? And you got, the currencies reacted on the upside. They all started to take off. You can see continued up. This is the Aussie. It's probably not so clear. The Aussie was up from the previous session, positive move. When it took off here, it just continued that move up until we got the deal. Now it's starting to roll over. And you've got a potential offer zone. Well, that's potentially, it's not a key one, that's starting to provide some resistance up at 6,800, say even. We backed off from that. Could be the profit taken because it's not what you know, it's what you don't know. And the market can factor in stuff, and once it comes out, confirmed it, and there's no surprises, then it can react. And it looks like it's reacting down at the moment. So it'll be interesting to see if the Aussie can hold an inside level here and blast straight up through 68 and continue its way higher, which would, to me, would sort of indicate a more positive market to potential a finalised trade deal being put out there. But at the moment, it's not. The euro is pretty much the same. We've backed off since the news come out. Since they announced that deal, we were up here. It's 1 o'clock in the morning, so the market was drifting lower into the close. So the euro were closing out. Any of these longs that sort of spiked it up here were closing out. When the deal got announced just before the close, the equity markets tipped over a bit, and we've got since then the euro's still been heading south. So it doesn't mean that it's going to head out. It just probably needs to flush out a few of these longs that are built up here. So we'll have to see how the euros go. But either way, crude took off, gold went down. So everything was all in relation to the trade deal. So if you see them starting to reverse those moves, all in tandem, it could be, a bit of non-belief that this thing's going to stick. If that makes sense. All right, so that's probably about it, guys. That's what I wanted to say. I hope that's clear what I was trying to say. So basically, to sum it up, what I'm looking for, I'm not adverse to be getting long on anything. Main is one that we're looking at. I don't mind this inside level. Maybe it's not going to tick off. If it gets through 61, that should be an inside level confirmed. Take off, expecting to go through 60, 65 highs. There's the volume did come in when it took off. And if that volume is decreasing as we're holding around 60, I think that's a good bet. And you can see there's a lot of fuel that would be on the sidelines ready to come in. So again, it's about fuel. Look at the weekly move. The weekly moves come right off these highs at 2. Sold off a lot, tried to come up. So anyone that's tried to board it up here, tried to buy it up here, or tried to hold on to it has been put under pressure, squeezed out. So there's a lot of fuel put back on the sidelines. All this move might be is a move up to 70, 80. If we get in at 61, for instance, it might just be a little pop and we roll over and take out the lows again. But by then we've booked something. So that's the idea behind that. Or it could be the start of a big trend up to test 130. We don't know. So there's still happy to get into something that's, in the shares, even though I might be looking at it, I'm trying to be negative on the market and what be negative on the market is going to stop me from getting into anything stupid and to getting into anything that's not is not a high probability setup. And going to keep me looking at the overall markets from a negative point of view because everyone is potentially getting in, loading long, and they're going to be filled to be squeezed back out of the market on the move down. I don't want to be one of those people. I want to know at the earliest possible time if that's going to play out, and I want out. I want to basically or position myself with some shorts as well. So I think if you're not looking at that and you start to get yourself bullish, completely bullish, or you get yourself biased, I think not saying one direction, but biased up too much and you believe it, you're not going to see the signs if it does start to roll over, or you're not going to understand why it's rolling over, and you're going to think it's just part of a correction, and then all of a sudden you're caught up in a bigger move, if that makes sense. So, for me, that's the way I'll be attacking the markets. Happy to get into stuff if it starts to set up. We've got net for me is something that's not too bad either. Look at that, had a good move up. This move down has flushed out a few. We've got a low here, a higher low potentially put in place. So that still could be one. We had on the cards a while ago. It hasn't come off yet. It's just, I'm watching this action just to see if there's something bigger that we're going to miss. And I just want to see what plays out. QFE is another one. It could be interesting. You want to just keep an eye on that. Let me just go here. So QFE for me, we got squeezed out of that. We took a loss on that with this spike lower through, I think it was 49. We got done on that day. It was looking okay right up until it started rejecting these highs. But now I think what you're seeing is maybe all part of a bigger picture of, so anyone doesn't know QFE, or was it quick fee? It's another one like, I think like, what is it called? APT, PPH, all those push pay, all those, even the SPT that we had, that sort of payment thing, stock. So if this is the case here, we've got all the part of a bigger picture here. Yeah, it's coming to that point of agreement where if you break through, say, 51, 52, it's probably going to be on the rise, and you've got the bigger picture of drawing in the bigger picture is potentially one, we've come down, we've cleaned out, we've had that corrective phase maybe on the weekly, and we're looking for that extension up. And if you can measure from that low to that high to give you some sort of idea of where it could be going to. I don't know what that is, but it's somewhere around, say, was that 25 up to, say, 60, give or take. What's that, 30, 35 points? If you take that from the low, if this is the low we're going to measure from, just say 45 up to, what to say, 35 points, 45, 50 to 80, somewhere up towards 80, even $1 if it gets ahead of itself. So if you've got something that could potentially, from here, could expand and do well, there could be a payout up to around 80 cents, even say 70 cents from 50. That's 40%, give or take. That could be a goer. So just keep an eye on that one too. It hasn't confirmed. It's a bit like the ASX. If it breaks down through here, potentially through or retest 44, we could just be consolidating between a range, and it might be stuck in a range for a while or going down. But if it holds these higher lows and it breaks up, then for me, I'm looking for the pullback to jump in. So that's one. Put in some stocks if you want, guys, before I start getting into too much. Anything you want to look at, jump in, put it up, and we'll take a look at it. Just trying to think of some other stuff. BWX is not completely going to plan just yet. It's potentially, if it's consolidating around the $4 mark, we might have to wait a while before it kicks on again. It did kick on Friday, which is great. And then the positive day has sold off. So it's a bit of a nutter. Can't think of anything else. The short on Cochlear, a bit concerned about that because I don't think that's looking like a short anymore. So we may got our stop just above 21,215. May reduce that. May just close out. It still could be one that if it rolls over into the close, it still could be a bit negative. Yeah, some selling still to come. I just don't think that's going to be a big winner for us on the downside unless the market completely capitulates. And at the moment, we could be looking at the near term, a bit of a rally in the ASX and across the board. Have to wait and see what the next couple of days brings us on the overall markets. So yeah, that's that. I might just go over. So when you put up some shares, any nickel stocks in mind there, Pete? I don't know. Not a big one to know which nickel ones could be good. But put up some codes and I'll have a look at them, without a doubt. Where was I going? I was going to show you just a SPY trade while we're having a chat, show you some entries. Now, I did trade something recently, which was, no, that's not it. That's the 10th, wasn't it? SPY on the 10th, 3rd. This. Yeah, it might have been I went long somewhere. I can't remember. I think it was in here into the close. So this, I'll show you this. Can we all see the chart up now? Close, I can't spell, by the way. So this is a 5-minute chart. You can see the action was down, but it was getting supported most of the session up until the close. So I actually went long off this little minor high low because when you come to that point of agreement, when you're going long here, yeah, okay, you can, but you're not sure whether this is all part of a big sell-off. You might pop up and then roll over, take out support. But when it gets bought up a couple of times during the day and it gets held up, say, for a third time, and you can see, I'll draw onto this. There's a few key points that's worth noting for your own trading, even though it's intraday. It's worth noting what's happening in the market. So if you can see this move down was quite savage. I'll just change that to yellow. Move down was quite savage, and then you got, that, what do you call it? The gradient of that move down was quite savage. You can see it just went boom, straight down. And I think it was actually from this open. I think the open was at this big red candle and bang. Then we bounced quite sharply, and then another good sharp sell-off. Then you can see, if I can draw and say from these lows, probably very similar bounce, but this is the move we're watching as it starts to grind lower. So if you're thinking of intraday, and it's the same when you're thinking, say, a weekly or a daily chart, when the move's down like that, as opposed to what happened previously, because the market knows it's tried to go through once, tried to go through twice, a second time, and it couldn't get through that support level. So if you're going to go short, you're going to be tentative. You might have gone short in here expecting a break. You got squeezed out. You've gone short again late into the trend. Or, if you're smart, you've got it up here as short, and then you didn't go anywhere, so you took it off. You might be tentative the third time to go short. Okay, so especially later in the session when the outcome becomes a bit more clearer. So anyone that's been shorting it, maybe on the open or here, there's some fuel. Even anywhere in the move down, if they've been shorting it, there's enough fuel that could be potentially squeezed out of the market. And that's what I was looking at basically here. Coming late in the session, those intraday positions would be looking to get out, and there could be a bit of a pop into the close, which is what you got. All right, and that was off a minor high low. I don't know what it was, whatever the price was. I've got it here around the 65.10, for instance. I think my stop was basically just below there, a break above, let it ride, see how it goes, and I got somewhere just before the close. It was only about 4:15, I think. I took it off, so I was happy to get out of that before the overall market had closed, because that if that squeeze, it could easily roll over because there's still some negative sentiment. Does that make sense? Just what I drew up. Where is it? Here. Why that become a bit of a trade, and because you got a third time, so anyone's intraday trading it, they may have, okay, you bought it here, you potentially bought it here. Anyone that's going to be biased long, maybe, even for a third time, if it starts to come down, if you're looking to go long, or you might think twice about it, and if you're looking to go short, you might think twice about it. So it sort of means that the move down is not as savage as it was previously. And that's something to take note when you're coming into a level, because when you come into a level like that, not like this, you tend to go, oh, look, it's probably going to hold again. And I don't want to go long just yet. I want to go long off a higher low, which is what I did there. But also, you don't really want to go short. So I think what that does, anyone that's been shorting it, and you start to get this move, might risk getting out. And what it does is that I think sellers would start to stand on the sidelines, and then you might start to get more buyers coming on the way down, whether it's just getting out of shorts or whether it's just getting in for a long position, expecting this to hold for a third time and get that pop into the close. So that's the theory behind that and why it did play it okay. But also, this kind of action, when it can't get through things twice, anytime it retests and fails a level, there's less people willing to try for a break again. That makes sense. So by the third time it's coming down, there's going to be less sellers that are willing to jump in. They've either been caught out twice or once before, been stopped out. You're more tentative to jump in on the short side. And that, if you flip that over on the longs, it's a similar type of thing. If it goes up once, say you got the market's pressed up, it's pulled back, I would look at this, especially as when you get these sort of moves down, then it presses up, it fails at those highs and starts to fail again. that's going to be a second time round. You're not really going to be buying that on the way down. There's going to be less buyers to support it as opposed to here because it's failed the second time. And it might just do something like this, or it could do anything. You don't know what's going to happen. So if you want to buy into that, you want to see second time it fails, you want to see it to start to hold at higher levels, consolidate there. Then you'd be happy to know exactly what your risk is for that break because you know the short's been building up, or sorry, stops will be built up above that level. So that's, you want more time of consolidating those highs, or consolidating this low to know that trend has just changed. Hope that's making sense. But anyway, we'll get on with it now. So we've got WSA, which we've been watching this, and it is starting to hold. I think Western Areas, if I've got the right one. No, it's probably Western Areas. I think it's got a good div. Not sure. No, not really. But anyway, so we'll start off on the weekly. It's a clear level around $2 mark there. And it's just reacted off to. On the weekly chart, you've still got key lower highs come to play. And this could be a prime position for another lower high. So that you've got to contend with that. All right. And we're getting a bit extended away from the MAs. But the good thing is, I just want to say this, even though I was just saying all that, it's a bit like what we just described then. All right. So you've got Western Areas on the weekly. So we're trying to build the picture. Key support, 1, 2, retested, even got through it, maybe got through the lows again, didn't go anywhere. Before you got the reaction back up, reaction back up, reaction back up. So we know that there's buyers prime there. Now look at the moves. This is probably the first reaction back up. So that would have been your initial bargain hunters jamming price higher. Sellers re-entered up here, got out. The second time it was a bit more contained. The move, the bounce off that support at $2 was a bit more contained. So, you could probably say that's essentially I would say a double top through that level before it come back down to test that zone. Now what we're getting, and if you just look at these two moves, forget about this because that was your initial reaction. This is your secondary failure of that level. It was a bit more contained there, and that rally was a bit more contained as well. But look at just the kind of way we've reacted up this time. And there's even you could say a fourth or fifth test of that level and failure. So it's definitely, and we've just broken through. I don't take it with a bit of grain of salt. It's more short term, the breakthrough 250, and we could be coming back into a zone where we're going to build a lower high and press down and retest again. Nothing to say we can't do that. But the way it's come up, to me, is suggesting, is there any sellers in the way of that move? All right, so maybe we're lacking. We had some selling here because you can see that kind of move, the chop, 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 chop all the way up. We had some sellers here, but not too many. Then they started piling in, pressing price lower. For me, that the way it's gapped up quite savagely, it just means that potentially there's no sellers that are willing to jump in just yet and press it down. That maybe because we're coming from a lower level again. So if if you held it anywhere up here and you're behind the 8 ball, you're probably going to give it a bit more time. If you've held it all that time through here, what's to say? I mean, why wouldn't you just keep holding it? So, but what that does, the reason why I'm saying this, I guess, is it has had quite a bit of bout of selling on the weekly. And anyone that wanted out, it could be out by now. And that's probably why you're missing the selling just recently with this little pop. So if you take that into account, and maybe that's the first sign of change of dynamics of the market, then I'd be suggesting that we could be looking to test 350 or even through that. All right. If we go back down to the daily, you want to see this hold. I don't like the action from Friday, that little red candle. That red candle from Friday, that was kind of bearish for whatever reason. And there's a bit of volume that come through there too. So that was probably news driven, was it? No, it was before some news. High grade discovery. So what day was that? The 9th, 10th didn't do anything. So even after that news, didn't go anywhere. And then it popped up on the Friday and then got smacked down. and finished pretty much towards its low. So not a great sign that, but what I'd ideally like to see, if I'm going to buy it, considering the weekly, that it actually is getting a bit extended. I want to see that case on the weekly where the MAs are catching up, which we described before. The MAs are catching up to the price. So I want to see price consolidate around 310, which may take a few more days, a week or so, even a couple of weeks. I want to see it consolidate there because I think the longer it stays at that level, the more chance it's going to drag in more buyers and the less chance that sellers are going to get out, which means it's going to go one of two ways, up or down. And if there's no sellers, they're starting to hold their nerve a bit and they're going to wait a bit longer. If there's less sellers coming in and more buyers, it means it's going to be up, you would suggest. Okay, so that's what I'm looking at here because I think there's probably, the gap between the MAs and the price is still quite wide, which could be, if we look at this, one move up, move down, a bit of a pop, secondary move down. So it could be a secondary move down where price is catching up to the MAs, not the reverse. But if we hold around here, it'd be more a case of the MAs catching up, which again, either way, it's going to take a bit of time. I wouldn't think it's just going to jam up from here, but we'll see. We'll see. So it's worth watching there, Pete. Lauren, the old ASB, was it JLG? Get rid of that. So get rid of news. Read my chart. There we go. So we're on the daily. It's well and truly, the trend is up. It's just that it's gone quite savagely for most of the year. It's gone up quite hard after 2 or 3 years of nothing. So it spent 2016, 17, 18 pretty much stuck between the lows of $1 and $2. It spent most of the time 2017, 18 hovering around 2, which was good, a good sign. That's why you've got accumulation. It could take a long time for something to get sorted out. I don't know what the news was. I don't know what had caused it to this sort of sell off into the end of 2015. It's retested $1 and it's holding higher levels. It's these little spikes down and getting bought up quite quick means a bit of a sign of strength. And then we started to lift. So prime entry would have been just in here. You can see just the start of the year. It took off. It's gone up. You've got this big blowout up. People chased it up. It's contracted, but then it's supported again around 350. So it's either got to do two things. It's got to hold here and have more of a longer term controlled trend, or it's going to blow out, as in pull back, clean out a few of these late buys in this area, and then reset and go again for the longer term. All right. So to me, I wouldn't be buying this just yet. I don't like the look of it. It could just go straight down through 4, and that could be the start of a deeper correction. You retest lows at 360, 340, even go through, pop back up, and then you've got more of a, let's say, longer term action. We might get, I've seen the levels for me. I mean, it's got a lot of room to correct itself. Even if you're just taking that sort of trend up there, it could even come into play. It might pop down, retest here, chop around, and that's enough. Potentially, it's still holding above that 360 level to clean out a few of these late buys. All right, put them back on the sidelines for fuel to get back in again. But at the moment, this is what we're saying before. There's quite a bit of fuel that's stacked up into this stock. It's not anymore the unknown. I always prefer to buy in the unknown rather than the known. And this is more of, okay, the market's going up. Just looking at this weekly, and we've known that since the start of the year. It's going up. It's going up quite strong. There's still room for it to continue. Hold above 4, chop around, and then go. But then you're getting in late to an extended trend. So you always got to ask yourself, how much further can it go before having a correction? Everything has to have a correction to put people back on the sidelines. And at the moment, looking at this stock, it does correct quite savagely. So maybe that's it. We got a savage correction here, maybe savage down to 3, then consolidate and spend a lot of time consolidating. Who knows? So it's just that old thing when you're comparing both the charts, a daily and a weekly. The weekly is looking a bit extended, but the daily is looking fine. From here, this daily is still holding. This is your first kind of decent correction. It's closed the gap also to 360, closed that earlier on, then started to lift again. Got a bit ahead of itself up at 460. We're cleaning out a bit, but it hasn't broken any anchor. This is all part of one move up. It's consolidating. If it's consolidating around here, it could suggest another spike up and that spike could take us straight through, was it 463? So you're just going to say, okay, if it goes through 463 and we're measuring this sort of move up, it could take us to 480. Risk reward, is that good enough for me? Okay, fine. If it's 1-to-1, maybe not. If it's 2 or 3-to-1, it could be worthwhile. Just as a short sort of a scalp trade or more a scalp on your daily charts. But does that make sense, Laura? Just from banging on about there? But it is, with regards to the stochastics, just go back a step, that could be enough. You can see too how, taking all these things into consideration, the stochastics it's pressed down here, it's pressed down here. Those 2 times, and the last time, well, it really wasn't down. We're up at, so we're around 360 when the stochastics were down here, got bought up. More selling pressures coming in. The fact that it's gone a bit lower on the stochastics, but it hasn't really got anywhere. It was only trading around here. And it's still, we popped up, got through 440, and we come back down again. Pressure's come back in from the sellers, but it's still holding up. What is that suggesting? It's just suggesting there's enough liquidity there from the buyers to hold it up. And if you go to the weekly, look at the weekly. We're just going to drill in there. Volume's coming down, stochastics are coming down with the pressure, but the prices, again, it's not quite moving. So that, to me, is a sign of strength. It could be just a matter of looking for your entry. Yeah, looking for a swing trade. No, I agree with you, mate. You know where your risk is because you're going to be basing that off your daily. And to me, the weekly could be supporting that daily that it's going to pop up through the highs, through 460 and trade to 480, 490. Could easily do that. But you've got to know, just remembering what's going to happen, what could happen. We could retest that 460 and fail. That's probably going to drag in some more sellers. And then, have a deeper correction to retest 360. You don't know. But either way, you know where your risk is going to be if the setup plays out. So it's really a matter of, for me, the setup would be exactly the same. We've got this level holding up. So we've got the projection high, which is this move. We've got the pullback. We've had another little pop up. It's sort of pulling back into that zone. So if you can get another little minor high and you get some sort of squeeze like this, then you know where your risk is. And you know you're taking it when it's starting to lift. If you get, if that makes sense, maybe through here, or you can take it through the tops of a different level. Does that make sense? But you want to see if you get this little squeeze and the market's coming to contraction and markets go from contraction to expansion, you want to buy it with the expansion, because that way you know exactly where your risk is going to be. You're not taking too much risk. It could easily be 2, 3-to-1 on that. And you're buying when it's rising, when it breaks through a certain level. At the moment, it's not set up just yet, but it could be. So no, good idea. It's definitely worth to keep an eye on, because if this market stays positive, there's ones like this that have been in a good uptrend on the weekly and the daily that are probably going to keep kicking on, if that makes sense. What's the other one? JLG. John's Lang Group. All right. The weekly's not saying anything to me apart from, there's 2 things, the fact that you got to look at what happened there. Let's just see that. So something's happened. Requires dividend results, I reckon, were probably pretty good. It was about that day it probably brought in some volatility, which was just before the results. So acquires Bright and Duggan Group. So that was taken positive by the markets, chopping around. This probably caused a bit of a sell-off. I don't know what the news, and a lot of the times the news comes out, it's an initial sell-off and then it pops again into the close as they muck around the retail in the open. But either way, longer term, it's supporting price. So that news has obviously been fairly good. Price has been supporting. Maybe that volatility from that past month, August, it's coming out. Once it opens up here, this big red candle, if you can see what I'm saying there, is it's just this red candle. It's opened up, tried to go a bit higher and sold off. It's probably cleaned out a few of these late buyers into that. The fact is on the weekly, it's still resetting itself above 170. It's not really confirmed. There is potential, if you look at your daily, for an entry through here. What's that high? 184. So you're buying at 185. Your risk, if it just goes straight from here, is only just below that low at 180. So you're at 5, maybe you can take a bigger risk. You know, if you trade like I do, or you want to take a bigger risk below 170, because that's more of a key level, 170. Because you got buyers bought it up, the late ones got squeezed out here. There's still buyers stepping in through, 170, even though they got squeezed out a bit here. It's finished above that level, retested here. Got these tests still holding, and buyers are starting to step in again. It hasn't got ahead of itself like it did in this move up or this move up, or it's probably a bit more like this. It's a bit more contained, but there's probably going to come a time when, if it's going up, there's going to be buyers sitting there waiting for a pullback. They realize they're not going to get it, and they're going to have to chase it. And that's what you want. If you get that chase, and then you can trade up towards 2, then great. But from here, nothing's confirmed. If this starts to look like it's going to head south and takes out 177 low of this red candle, then I'd probably be just thinking twice about it. Well, I wouldn't be in anyway. I'd just be going nuts off the cards, because that could lead to a key lower high coming out. It starts to trade through 170, 165, comes back down to 140 to reset. Does that make sense? All right, so that's probably about it there, guys. I think that'll going for an hour there. Hope that is there anything else quickly before we leave? We turn it off. You want to take a quick look at? If not, probably call it a day. Market's still holding up 46. Just going to look quickly where the SPY is. So at this stage, I was looking for a potential long here. But it just didn't play out, so it keeps resetting. There could be a long soon on the SPY, because to me, that's enough of a clean out. Had the markets pressed up. Let's just delete that, sorry. I'll show you what I'm talking about here. It's just worthwhile having a bit of a look at. The market's pressed up. Come on. Down, up, down. So you've got your 2 moves down. So if we start to reset here, chop around here and into the close, we might start to lift again. You don't know. So it could be a bit of a late rally into the close again, and we hold these highs, but we'll see. But if it's going to hold a key high low at around, say, 66.26, hasn't confirmed that yet, but that's what I'll be looking for, to see if it can lift. Probably don't want such a significant pullback here. I'd probably rather see that somewhere around here. You get your high low, squeeze into the close. But either way, we'll see how we go. XRF, let's do that, and we'll finish up there. XRF. I can't spell XRF. XRF. Scientific Limited. Only a smallie, is it? 46 grand. Liquidity is next to nothing, so I can take off. Looks like it's stacked up on the buy side, but don't be fooled with that. But either way, that's the way the market's going to look at it. Look, weekly, I think it's cleaned out enough highs to at least get some buyers to start taking notice. So really, you've got a zone, probably through here. Buyers bought it out even a bit lower. They let it drift lower. It's reacted straight back up again, which is good. So you've got your overall trend. Trend up here, trend down. So you've got this double tap here. It did that for a while. Got a lower high, so it's a key, and that's probably what drove it down through. Don't know what's caused that. It's on the weekly, it's drove it through, but that's reacted straight back up. So what it's done is taken out a few, key levels, which you can see, and this is the major one at around, say, 23.5 with this move up. So that was quite a strong move up, considering that it was in really a downtrend right up until it broke, say 21.5, till it broke that high. It was in a downtrend, because it could easily stopped here, headed south again, and gone back. It could have gone back to 5 cents. Who knows? But that's what was on the cards there, right up until we broken up through. So really, from here, I wouldn't mind seeing it maybe cleaning out and then holding my higher low and then go, so you know where your risk is. So I think this could be start of an uptrend, longer term, where you could be targeting up towards 40 cents. 0. 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 0 It's not quite showing it. I think this was going to be news driven. Look, there's potential it's going to hold up above 22. So that 22 was moving back to the MAs on the weekly, and just through on the daily. I don't like the fact you want to see this action. You've got here holding MAs, basically held MAs through, just drifted up and then took off. This year when it spiked below, if it can hold the MAs again, because that could have been news driven. It's obviously it's opened down and finished up for the day, but down from the previous session. So it's not a bad fight back intraday. If it can hold up here again and hold around 20, the more days it puts in around 24 or thereabouts, you probably may not worry about a bit of a pullback. Does that make sense there, Lauren? Do you agree? Yeah. Oh, okay, dividend. So there you go. Taking a div. It's cleaned up. It could be resetting itself, and then up we go again. Should be great. All right. All right, guys, before we finish it up there, thanks for joining me. Back in on Monday for the live stream. Now, the overnight talks, they may be at the wrong time. We're not getting a lot of traction on that. And I was just really testing to see how many people started watching it, whether it's worthwhile continuing to do the 10 o'clock or 9:45 talk. This takes a bit of time, but if I'll probably do that. I won't be doing that on Mondays, I wouldn't think, but I'll probably continue on that the next few days, just see how we go. I might even put to a sort of an aftermarket. It might be worth doing it at say 5:30, 6 o'clock, and talking about what happened during the day and what to be looking for. I know it's probably you're missing a bit of data from the overnight session, but it's worth having a bit of a look at. So we'll see how we go. If anyone thinks that could be a good idea, let me know, and we'll go from there. All right, guys, have a great day. I'll probably be on in the morning about 9:45 tomorrow. Just a quickly 5-10 minute chat. So we'll see if anything significant happens overnight. Actually, the US is closed, so there might not be much to talk about tomorrow morning after market. All right, great. All right, guys, have a great day. Let me know, and I'll speak to you soon. Cheers, bye.